we would get clients that didn't have a social security number, but would bring their ITIN number. They would bring their Mexican ID card, their matricula, and they would essentially cash their checks there, and they would file their taxes and everything like that. Hi, everybody. This is Joseluiz Morales. Welcome back to the Morales Group Show. This is episode number 56. Today, we've got a very special guest. His name is Byron Enriquez. He's a loan officer here in Southern California. And today's topic, we're going to be talking about, can someone without a social security number get a loan? In other words, can someone with an ITIN number get a loan? Or can only people with social security numbers get loans? So welcome to the show, Byron. How are you?
Good, man. Thank you. Thank you for having me. I appreciate the time.
Good. So the reason I wanted to bring you on the show, Byron, is I have heard from many loan officers saying that they've got a loan product for people that don't have social security numbers, but I had never actually met somebody that had done the product. And it was one day that I was talking to a client and he told me, yup, I just closed on my property 3 months ago. Byron Enriquez helped me, gave me a great interest rate, gave me a great loan. And that's how I was able to get in contact with you. So that's the first time that I've ever heard from you. So today's topic is going to be ITIN loan. So let's start off by saying, what is an ITIN loan versus a regular loan?
So an ITIN loan is, in essence, it's your typical loan, right? It's the same thing for like a normal borrower, but it's a loan product that's been designed for people who have a tax ID number but have a permit to work here legally in the United States. It's the same digits as a social security number, but on that social security card it says for work purposes only.
Perfect. So what a lot of people don't know, Byron, and I came across this in the check cashing industry, a lot of people think that people that don't have a social security number don't pay taxes, and essentially the government actually issues a number called an ITIN number, and that number allows them to actually file their taxes and pay taxes or even receive reimbursements depending on their income as well too. So that's, I think, one interesting thing that a lot of people don't know, and I came across it in the check cashing industry because we would get clients that didn't have a social security number but would bring their ITIN number. They would bring their Mexican ID card, their matricula, and they would essentially cash their checks there, and they would file their taxes and everything like that. Okay. So how does this loan product work? Is it the same thing like a regular loan, like 2 years job experience? What's the job experience like? What do they ask for in order for somebody to apply for this type of loan as well too?
Yeah, so I'm actually glad you bring that up about the tax returns, and that's kind of a misconception a lot of people do have, is that there's these people who are here legally working or here for different jobs that have been brought over to the States, right? And they're doing their taxes, they're filing taxes, they're paying their fair share, they're doing tax returns, like you said, they're getting refunds, but then there's this whole mix of people who that kind of get lost in the mix, right? So, and these loans, and, kind of just to touch on your point that, I've actually been able to close one. These programs have been around for years, and they're accessible to most loan officers out there. Our unique situation with myself is I own my own brokerage. So it gives us the ability to be a little more flexible and be able to choose who we want to work with, right? Which financial institutions we know have a better reputation, and be able to built on the relationships that we have, of over 20 plus years in the business, we can build on those relationships and be able to put together these packages that actually will work. But to get to your point, these programs it's almost identical to a typical loan, right? You need 2 years tax returns, filed under that ITIN number, right? And that's the key, because a lot of people who maybe got ITIN maybe last year or 6 months ago, but maybe they've been doing taxes under a corporate tax ID number, or an EIN number, or some different form of doing their taxes. We do need 2 full years of tax returns under that ITIN number, right? We do need 2 years of being at that same job, right? We need to show that and it has to be here in the U.S., right? It has to show proof that they've been, here in the U.S. There's pay stubs that can constitute that, to show us that there's those tax returns that are super, super important that give us the validity of their income here in the U.S. So, I mean, on top of that, there's other, requirements and whatnot, and we can get into those. It all depends on how much time we have.
Yeah. Can someone go back, like let's say that they had been working at the same job for whatever reason, they just filed for their ITIN number in the last 6 months. Can somebody go back and connect the job history with their ITIN number after the fact? Or is that something that if they haven't been filing under that ITIN number that they can't basically do that?
So I'm going to answer that a little bit vague, right? And because that's the only way I can answer it, because I'm not a certified tax professional, right? Okay. That does have to do with their CPA or whoever's doing their taxes. As long as they can provide us with those 2 years of tax returns with that ITIN number,
that's all
then
you can ask for,
that's all we need. That's all we need. As long as we can validate that, it's up to their CPA to know their tax rules and guidelines. If they can go and back, and file for a previous year or 2 years or 3 years behind, right? As long as they can provide those returns. Yes, as long as they can provide those returns and they're verifiable through the transcripts of the IRS, then we can do that.
So in other words, talk to your accountant in that regard.
Speak to your accountant about that. That's yes.
It's basically 2 years of tax returns, and as long as he has that, then essentially that. Okay, good. And then are these loans like 30-year fixed loans? Are they 10 years? Are they 15 years? What's the interest rate like as well too on these types of loans?
Well, and then that's where we have some flexibility, right? And that's what it does work like your typical loan, right? That's where you choose the financial institution that we're working with, and we're looking at pricing, and we're looking at who can give us the better rates. So they're all 30-year loans, right? They're still amortized over 30 years. There's 30-year fixed, there's 5-year fixed, there's ARMs, there's a different range of products that are available within that same sphere of ITIN product.
Okay, so essentially it's very similar to a regular loan. Now, this is what I've heard. I've heard that the interest rate is higher on these type of loan products, and rightfully so, because obviously it's a niche product, meaning that it serves a certain amount of people, and probably investors on the back end want a certain amount of return as well too. How much higher would you say that the interest rate is than the traditional 30-year A+ type of client? Is it like 2 percentage points, 4 percentage points? What would you say in regards to that?
Yeah, and that's a good question, because some of the things that I'd like to clarify when I speak to a borrower who's interested in these loans, and I'd like to have that consultation, right, and kind of walk them through the process, walk them through the expectations of what they're going to come across. Yes, it is more expensive, right? Interest rates, and we'll get on that in a second. Down payments also are a little bit larger. The main difference is these loans are, if we can get into the weeds a little bit, but these loans are not insured by Fannie Mae, Freddie Mac. So these are more portfolio products that these lenders do offer, right? So it is, like you said, they're providing a return to their investment group on what those returns are. But a lot of times, the first question I always get is, oh, can I do an FHA loan? Can I do a 3.5% down? Am I going to get that 3.5% rate that I see on TV right now? And that's not the case. Right. It's just I'm always very upfront with people and tell them, the rates vary depending on the amount of down payment, your credit score. And that's another kind of a weird factor, because, a misconception as well, that people can't have a credit score with an ITIN. Like you said, you've come across it in the check cashing business, but they can go get a car. They can have credit cards, and there is a credit profile established. So we do need, the higher the credit score, like your typical loan, better interest rates. But you are going to see interest rates north of, right now in this market, I'd probably say north of 6%. So it is more expensive than your traditional loan, which you can probably get for 3.5%, 4%. So we're looking in the 6 to 6.5, and maybe even higher, depending on credit score and how much down payment you are willing to put into the transaction.
Yeah. So essentially, it's a product that is meant to help a certain amount of people. Now, what's the minimum down payment like? I know that obviously you touched on the fact that it's not 3.5%. You can't buy a property with 0% down payment. What would be the minimum requirement in that? And obviously, I would imagine that it depends on the credit score. It depends on the credit score. So, but what, as a general rule, what would you say that is?
As a general rule, I always tell people, be prepared with 15%. I've done it with 10%. It was a top tier client within the ITIN space, good credit score. good job history and had a lot of other compensating factors to show for me to be able to sell that to the investment group. But always be prepared for at least 15%.
Okay. So 15%, let's say on a $500,000 home is roughly about $75,000. 10% is roughly about $50,000. And I simplify it just because, I talk to people all the time that are like, I tell them 10%, what does that come out to? And it's just kind of have an idea of what that would look like. And you said a top tier client basically was able to get a 10%. What would that look like a top tier client in the ITIN world? Is that like a 800 credit score, or what would make somebody a top tier client?
So in our side, top tier, anything usually above 720 FICO score.
Okay.
They can range in between 400 to 8, in the 850 range. I think it's the max you could get. Those, I will tell you, I've been doing this for 20 years. Anybody in the 800, those are the unicorns, right? We rarely come across those.
Oh, yeah.
But anybody in the 700 plus or 720 plus, there's a lot more ability to do some things. It also the type of home it is. If it's a single family residence as opposed to a condo, manufactured home is probably not you're going to need a lot larger down payment. So there's a lot of factors that come into play. To be able to maneuver that and to be able to structure that the right way, to be able to actually see a successful story, get somebody into a home.
Yeah. So essentially there's a little bit more flexibility if it's a single family versus an HOA or versus even a manufactured home. What would you say is the minimum credit score that you could do it? I know that for FHA, they like to see like 640 range, right? With FHA, but they can go lower, like 620. I think they could even go as low as 580.
And that's what I was going to say. So yes, that's again, and that's the relationships that we have. So your base score for FHA is actually 580.
580, right? Yeah.
Most lenders attach, their overlays or they attach things to it where their investment group or their group feels a little bit more comfortable. So what you see on average is about 620 to 640 is what the majority of the lenders out there. Myself, having that flexibility, through our brokerage, we can go down to 580. Same with the ITIN, right? It's not as low. Most places that offer ITIN are going to want to see anywhere between, there's two factors. You can go as low as 640s is what they want to see. I can do it down to 600. Again, 600, you're going to need a higher down payment. Your interest rate's going to be higher, right? It's a higher risk loan that we're putting on the books. So it is a little bit riskier. But there is some factors, some people who have no credit score, right? Who have never applied. And we can do those as well, right? There is a home for that in the ITIN. If they've just never applied for credit, there's no credit profile established. We can do it. Again, that's going to be, probably 25% down. Rate's going to be 7%. But it is something to be able to get into a home and start building on that credit profile, so that in a couple of years they could refinance and maybe get into a little better situation.
So where I see this product helping as well too is maybe somebody that does have a pretty large down payment, 15% down, that has been able to save up 70, 80,000, which, believe it or not, people, there are a lot of people out there that don't have a social security number that have this type of money. And essentially, what if they're applying for legal residency and in 2 years they're going to get their legal residency? They are able to buy because the market has been going up. They basically refinance once they get their legal residency, and then basically they're able to refinance to a regular traditional loan at that time. And then basically it's a win-win for the investors because the investors made 6-7%. It's a win-win for the person that had the ITIN number because they were able to get a loan. I look back at this product and I'm just thinking, man, for those people without social, what if they had bought a home back in 2010, back in 2009 when it was the bottom of the market? Now that house is worth 500,000-600,000, 700,000. For people like that, I mean, it would have been a great product. But I think that sometimes people don't know that these programs are available, and they don't know how it would work. So essentially it holds them back from doing these types of activities. So if somebody wanted to get started with this type of loan product, what would be the first step for them?
I mean, the first step would obviously speak to someone in the lending side to be able to get them pre-qualified, right? It's have a consultation, speak to someone, go through the process of, let me look at the taxes. Let me look at the the credit report. Let me look at your bank accounts. Another one thing, and I wanted to bring this up because we're talking about sometimes 60, 70, $80,000. Those are large amounts. One kind of a issue that I come across often is the cash.
Yeah.
Right. Is a lot of those people that, because there's some uncertainty with their legal status, are reluctant to deposit that money in a bank. Right. So a lot of times, and I've had situations where it's like, look, here you go, here's the cash. And we can't work with that. Right. The money does have to be in a bank account. So I say that to people now, because a lot of times if it is something that you need to do, go deposit in your bank, go speak to your banker, go, do the things you need to do. Because it does need to be seasoned, and it needs to be in the bank account for at least 60 days prior to us being able to validate those funds. So that's important, right? That's super important to bring up. But that's the initial conversation that we have with somebody like myself, or other people in the industry. It's let's review your taxes, let's review your pay stubs, let's review the documentation you have, and set those expectations so that we know, hey, you're going to be in the 15% down range. You're going to be in the 20% down range. Is this something that can happen, or is it not? Or we do some planning ahead. So where it's like, look, you'll maybe you're there in 6 months, or you're there 9 months, or a year from now. So at least we can set those expectations so that they know, they're not going to go fall in love with a property tomorrow, and then we're left to pick up the pieces. And you've been there, I've been there millions of times. Where next thing we know, we're sitting there trying to pull a miracle off, and we're like, you would have come to me 60 days ago, we could have structured this a little bit different and helped everybody out.
How long do these loans take? I know that traditional loans, some people can get them done in 21 days, 30 days, sometimes even faster. Traditional 45 days. Do these loans take any additional time because it is a portfolio versus a Fannie Freddie type of loan?
No, it doesn't. And picking who you work with is key in this arena, right? Is being able to have that relationship, to know the product. So, one of the things that I do ahead of time, because I know these loans, I know these products, I'll pre-underwrite the file with the borrower ahead of time. And I will, I can collect all the documentation that I think they're going to need, so that when we do submit, it's a full package, and they're not, that's the back in this business. What kills this and what extends it is the back and forth. Yeah. It's, hey, you didn't provide this, you gave me 7 out of the 10 things. Underwriters hate that. They don't want to look at 7 things and then still wait on 3 more things. And then, because what if those 3 things had more questions, and then it's that back and forth. So it's being prepared, speaking to someone, gathering all the documentation up front. But these loans, we can do them, 17 days, 21 days. I don't promise that. I always like to set proper expectations, just because it is busy. The market's busy right now, as you know. All the banks, everybody's busy. One of the things that's taking the longest right now is appraisals. It's just because there's so much inventory moving and trading right now, that the appraisers, are valuable. Their time is very valuable. So that's
because of all the refinances as well too that are going on. Like literally, you have one of the hottest real estate markets out there. Then you have everybody benefiting from a refinance. Everybody's refinancing right now. So we all need the appraisers. So the appraisers are super backed up. They're super swamped. And essentially, they're overloaded right now. The last thing I was going to ask you, Byron, is what about fees? Okay, a traditional loan is 2, 3, 4% right now. A ITIN loan is 6, 7%, somewhere in that range potentially. And then a hard money is like 9, 10%. I know that a hard money has obviously like points that they charge. What do the fees typically look like? Are they higher than the normal? Are they in between the hard money and the regular?
Fees wise, actually, it's pretty standard. It's the same. You're going to pay your underwriting fees. You're going to pay your processing. You're going to pay escrow title like normal. So none of that's going to change, right? That's going to be the same scenario that you come across on a conventional loan. Hard money or private money, which is something that I do a lot of. Those are a little bit more expensive, obviously. Yeah. But this loan is going to be pretty much middle of the road. It depends, again, who you're working with, right? It depends on the relationship that we have established with the investment group that's funding the loan. Everybody needs to get paid, right? So it's either and I always tell somebody, they're like, oh, I got a loan for free. No, you didn't, right? You paid for it either in the interest rate, or you paid for it in fees, or you paid for it somehow, right? This is our business, and this is what we get paid to do. So it's a matter of shopping around, talking to someone, like myself. I can actually shop an ITIN loan to 4 different lenders, and I can give you 4 different quotes, all working through me, being able to, facilitate that process. So it makes things a little bit easier.
Is there a funding fee? I know hard money loans have like a funding fee, like 1.5, 2.5 points. Is there a funding fee on ITIN loans at all?
No. So that's like I said, that's the regular fee. So, and again, some ITIN loans, depending on the financial institution, if we're getting a lower interest rate, we'll charge like a point or whatever up front. So it could be.
Okay, sounds good, Byron. Anything else that you think would be helpful to our viewers?
My thing, and this is not just for ITIN, this is my advice that I just constantly give people is work with someone you trust, work with someone that you can put your trust in, be fully transparent and fully honest, right? It's the one thing we all hate in this business is when someone's leaving information off the table, because it's going to come out. And us as professionals, if we know what we're doing, we can cut that off at the pass. We can prepare the road because we know what issues we have. We can provide the proper documentation, or we can tell that story so that when the deal's on the table and everybody's looking at it, there's no surprises. There's not like, oh, how come you didn't tell me there was a bankruptcy? Or how come you didn't tell me there was child support? Or how come you didn't tell me that, whatever the case is, right? As long as we know the full story. And I always tell people, just give it to me. Just, give me all of it. And then let me figure it out, and I'll clean up the pieces. And I can give you an honest answer if it's something that's over, that we can achieve it or overcome those issues or not. But full transparency, and then work with someone you trust, work with someone that knows what they're doing.
It's funny, Byron, I've had a couple of situations in the past where people have had a bankruptcy or do have child support or know that they have tax liens, and they think that by not telling the loan officer, it's not going to come up. It's 100% going to come up. It's just going to make things more complicated, because if you don't tell your loan officer, it's going to catch them off guard. If you actually tell them, they'll be able to guide you on how to prepare. So that's one of the biggest mistakes that I see when people think that they can just hide something like that from a loan officer. There are systems in place for that to come up. And essentially they're going to find out, and it's going to throw it could put you as a buyer in a really bad situation, because maybe you release your contingencies at that point. Maybe your deposit's at risk. And by not disclosing that to your loan officer can't do the loan anymore because you didn't disclose it and he wasn't able to tackle it on time.
And not only that, one of the things that I always tell people is that what ends up happening is that when you're not upfront and then the underwriter finds out, now they think, well, what else are they covering up? Yeah. And they just tend to look a little bit deeper into everything you provide. Right. Yeah. But as opposed to if we give them everything up front and we give them a good story and we explain, look, there is an issue and this is what it was and this is how we overcame it. They're like, oh, okay. Right. That makes sense. They're not questioning everything that we throw out there to them, because once you get in that, they start questioning everything, and it just makes everything a lot more difficult.
Yeah, the integrity is not there. So it kind of makes them a little bit like, hey, I need to be more cautious with this individual. The last thing I wanted to say to our viewers out there, obviously a lot of people are going to be watching this production on YouTube. I wanted to say, hit the subscribe button if you haven't done so already. Feel free to like it, share it. We also have a second YouTube channel. It's called Jose Luis Morales Clips, and they're basically little short clips of our larger interviews. I wanted to say thank you to Byron for obviously being on the show. Thanks for sharing all of this information. Where could people get a hold of you if they have a family member, if they're personally interested in doing a loan like this? And then what other type of loans do you offer that maybe consumers can reach out to you for?
Well, I appreciate you having me on the show. Definitely. I mean, I know that we've been trying to get this on the books for some months now, but we're always both pretty busy. So you can find me on my website, www.jssfinancial.net. My phone number, and I'm sure we can link everything so they don't have to write everything down. Phone number. I own the brokerage, so if you talk to me, I can guide you through that process. Our firm that we have established is we pretty much focus on the non-traditional forms of financing. We can do your FHA, we can do your conventional, we can do all the things everybody else does, but we have all the other stuff that nobody else wants to touch, I guess is the way I say it. I do a lot of that private money. We do the construction financing. We do a lot of things, for people who are looking to invest into real estate. We teach them, we walk them through that process of being able to flip a property. We do a lot of the bridge loans, and we do a lot of interesting things for commercial properties or non-traditional properties, mixed use and things that a lot of the typical lenders shy away from. But our thing is always trying to be very concierge service. We try to hold your hand through the process. We try to, you're not going to get lost in the mix and get tossed into a processing center or a call center. You're either going to speak to me or one of my assistants or people that we work closely together, and you're going to hear from me individually, constantly throughout the process, and we're going to walk you through, and we're going to be able to get you. We can consult with you and figure out what it is you want to do and get you to those goals that you're trying to accomplish.
Perfect, man. Well, thank you again for being on the show. This is Morales Group episode number 56. Hit the subscribe button, hit the like button, and feel free to share it. And stay tuned for the next episodes. Thank you so much. Make it a great day.
Thank you. I appreciate it.
Done.